and welcome to CoinDesk Live. We are coming to you from Chainlink SmartCon in New York City. I'm Jen Sanasi.
And I am Sam Ewan. Great to be here, Jen.
Day two.
Day two.
We're here for day two of SmartCon. We've had a lot of conversations, both at the conference and at the desk. Sam, talk to me about some of your highlights from yesterday and what you're looking forward to today.
I will say most of my conversations have been really just about how mature the industry is getting. We heard a lot yesterday in the TradFi world, in the hybrid of TradFi and DeFi. I'm just really interested today in hearing more about how people are going to be utilizing this every day, whether you're an institution or you're an individual. And I think that's what I want to focus on today. And I think, you know, obviously, yesterday was election day. We heard a lot about what's happening in the world. So I want to get the perspectives of our speakers on where market structure is, where kind of the Genius Bill is, in their opinions, and where we're going to go in the future to make sure that this thing is just going to become what we want it to be in the crypto industry. And I'm excited. I think yesterday was great. I think today is going to be even better. What were your highlights? Well,
we're really on the same page. And for me, part of that maturity is this underlying foundation of regulation, right? We talked a lot about the Genius Act being signed into legislation. We have market structure coming up. I know Patrick Witt is going to be joining the conference later on today. He'll be in conversation with Sergey Nazarov. Sergey is going to be joining us at the desk in just a moment. I'd love to hear his perspective on how legislation is progressing in the United States. But what we've heard from so many people as this industry matures is that is really the foundation, and that's what's accelerated us to events like this, to the conversations that we're having here in the global epicenter of the world, global financial epicenter of the world.
New York City is. I also will say this is such an exciting event because there are so many people here. There's a lot of conversation. I noticed earlier there was almost 900,000 people that had watched the Chainlink stream. So people are very interested in what's happening in this because I do think it's a very future-looking event, and it really sort of, all the announcements have been exciting, and I will talk to Sergey about that. I think that there's an opportunity for us to look back 2025, 2024, and say these were really the core building years where we made the transition from kind of back streets to Wall Street, and we're seeing it happen in real time.
So many people I spoke to yesterday at day one said, you know, we couldn't imagine a year ago that we would be at an event like this talking about some of the announcements that we're talking about and some of the partnerships that have been able to form because of that underlying regulation. And so, yeah, really excited to get into it. If you're just joining us, we are live from Chainlink SmartCon. We'll be bringing you the best of the conversations from the conference today. And let's get right into it. Kicking us off is Chainlink co-founder Sergey Nazarov. Welcome back.
Happy to be back. Thank you for having me.
All right, you were here yesterday. You heard Sam and I talk a little bit about our takeaway, and it really was this regulatory conversation. We wouldn't be able to be sitting here today talking about the announcements we're talking about without the progress that's been made in the United States. Patrick Witt will be joining you on stage later today. Curious to hear what you want to talk about with him, what you're hoping to draw out from that conversation.
So I just wanted to clarify the reasons why the White House and the Trump administration are into crypto, and I think people should really understand that it is really a priority for them from the point of view of the technology or the technologies that are going to power the US's future. AI is obviously a technology that's a priority. Cryptocurrency and blockchains are a big priority. So I think there's a real genuine commitment from the Trump administration, and Patrick, who is the executive director of the White House's kind of task force on blockchain stuff. So there's a real commitment, and that commitment has now reverberated. There's been enough time for it to reverberate through the different agencies. So if you look at the chairman of the SEC, Paul Atkins, I've met with him a few times. A bunch of people in our industry have met with him. There's really a different level of commitment from those agencies, because now you have leaders put in place essentially by the Trump administration that are there to make crypto grow and be successful in the United States. And that is a very serious force for our industry, because for two reasons. One, the US's rejection of crypto was, I would say, the biggest counterbalancing force against our industry. So you have a counterbalancing force that disappears. And then it goes completely in the direction where it becomes a force that accelerates the industry and legitimizes it and makes it clear to institutions, to your point about the announcements, that they can do transactions now and implement blockchain-related infrastructure, which is obviously great for Chainlink because we've been working with these institutions for years, and now we just have a huge amount of deals that are just converting to, oh, time to go live.
Sergey, I think if we looked at really 2020 to 2024, a lot of people would have said that the way that the Biden administration handled it was over-politicized, right? It was really a badge almost to be against crypto. And I think to your point, it's kind of flipped the other way. I really think that the U.S. is such a hub of innovation that it should completely be bipartisan. And I'm just wondering, what do you think is the message that the Democratic leadership really needs to learn about why this is something they should also embrace?
So I think what happened is that FTX backfired big time on the Democrats. So the founder of the FTX was a really big donor.
Yeah.
And in contrast to Terra or other failures in our industry, FTX did have a significant amount of US users. And so the Democrats, because they were somehow tied to Sam Bankman-Fried, had to take a very hard stance against crypto. So that I think his goals was to accelerate our industry. So his goals from the point of view of donating to the Democrats was not to decelerate, was to accelerate. And it was working until it really wasn't working, unfortunately. And so since that happened, the Democrats, I think, have had a very biased and skewed view against crypto, the FTX thing. Now, the FTX thing is behind us. You know, it's well in the past now. Then what happened was the Republicans decided to go pro-crypto. That didn't help the Democrats love crypto, right? Because now the opposing party is kind of the party supporting crypto and getting the benefits of crypto, both in a donation point of view and a voting point of view. And I have heard from Democrats that they feel that the crypto industry is like an arm of the Republican Party, right? Which, you know, isn't the situation you necessarily want to be in. You want to be, as you said, in a bipartisan situation. Now, just to be clear, there are very thoughtful, you know, Democrat leaders like Senator Gillibrand, who's actually the senator from New York, who's organizing the Democrats, and there are very thoughtful Republican leaders like Tim Scott, the chairman of the Senate Banking and Finance Committee from the Republican side. And so what's driving those very thoughtful leaders in both of those groups is the value of the blockchain industry. So there is a lot of economic value, not only in the crypto industry, but actually in the blockchain industry and its effect on the financial system. Not in the sense of creating more cryptocurrencies that people can speculate on, but in the sense that you can have financial institutions tokenizing bonds, stocks, commodities, funds, everything in the financial system. So I think what's happening now is you're starting to have like a realization that the market structure bill and what our industry is about is not just about highly speculative crypto things. It's about that, and it's about the next iteration of the financial system, which is what we've been doing our best to clearly communicate. I think the Democrats, once they understand the benefits of our industry's technology to the US financial system, it'll become an even more bipartisan issue. I think the Republicans are already bought into that idea. So the Republicans are already bought into the idea that in addition to whatever the value of cryptocurrencies is, or Bitcoin as a reserve or whatever it's going to do, the value of the technology for the financial system is so large that you don't want the hub of innovation to be outside the US. You want the US to be the leading provider of high-quality blockchain technology for the financial system.
Just to double click on that, you know, we have an interview coming out tomorrow with Reid Hoffman that I did, and I asked him the same question, and almost verbatim he said SBF and FTX really ruined it for the Democrats, and he as a Democratic supporter really said he thinks just Warren took it way too far in what they're doing, and totally agrees that this should be an innovation play. This should be us thinking about how do we make the U.S. the capital of crypto in general. It should not be an issue that we have to argue about. It should be about how do we move finance into the future, and this is the way to do it. So I think that's a great point.
Sergey, I know you've been in the room with both Democrats and Republicans who are debating some of these topics around crypto and blockchain. What are some of the sticking points that the Democrats still don't understand, or that education gap that's still there that needs to be addressed?
So after working with senators and congressmen for basically this year, it's my first experience with them, but over the course of the year I've met with a lot of them some of them multiple times, they really have a very large breadth of issues. So they're not just covering one issue. They need to understand like 20 issues. And I think what's happened is that because the Republicans have gotten more donations from crypto, and because they've gotten more votes from crypto, they've taken more time to learn what DeFi is and what it isn't. And what it isn't is almost as important as what it is, in the sense that there's a lot of confusion still about why crypto is good or bad. So I'll give you an example. From the Democrats' point of view, I still feel a sense that all cryptocurrency stuff, all blockchain technology is encouraging money laundering, encouraging illicit finance. That's actually quite wrong, in the sense that the percentage of illicit finance in the traditional system is up to 5%. The amount of illicit finance in the crypto system is below 1%. So actually, the transparency of blockchains makes illicit finance and money laundering harder with cryptocurrencies than it is in the traditional system. But that's always surprising, right? That's also surprising to Republicans. The real point is that Bitcoin's history or initial beginning as a form of payment for dark markets, then this SBF stuff, some of those failures, and the idea that cryptocurrency is related to money laundering, I think that's one of the things that, you know, President Trump, before he liked cryptocurrency, referenced as, you know, one of the main reasons he didn't like it. But see, in that case also, once people understand that the technology doesn't encourage money laundering, it actually makes it harder than the current system, I think things become very different. So I think that the Democrats are now in the process of understanding how blockchains actually work, what decentralized finance is versus isn't. And the problem is that everyone in DC has been hammered for a long time before this administration with how evil and bad blockchains are from a money laundering point of view. And you know, the SBF thing obviously didn't help at all. So I think there's still some basic understanding of money laundering is harder with blockchains. The financial system benefits from Oracle networks and smart contracts powering it. And you actually want to be the place where all that technology is made. That's how you can exude some amount of oversight or control over it. If you do what's been happening for the 4 to 5 years before Trump, you're just going to push it all offshore, and you're going to have no control. So, you know, that's kind of the scary alternative that we present to them, which is true. And so that's what they definitely don't want.
What I also think is interesting is what the pundits and the press and the politicians were saying about Robinhood, about PayPal, were all the same talking points. Anything that felt uncomfortable, they resisted until it became adopted. And I think we are seeing, especially at a show like this, how many people from the JP Morgans on down are adopting this technology. And to me, that's a wondrous way of looking at that innovation kind of pushes forward regardless.
Yeah. The JP Morgan folks and all the other banks and large institutions, they're adopting it based on the merits of the technology, right? And DeFi is growing based on the merits and the value it provides, not because it's involved in money laundering. And this is just a misconception. So this is a big misconception that's been perpetuated in DC for a long time, that we're now, you know, rapidly chipping away at and getting rid of. And there's certain groups that understand that already, and there's other groups that don't. You know, generally speaking, you know, if you're a congressman or if you're a senator and you don't really understand how the technology works, you often default to what like the crowd wisdom is. And the crowd wisdom is still in this world of, oh, blockchains introduce risk. And that's not true. Blockchains reduce risk. Smart contracts and Oracle networks reduce risk for how financial transactions work, how transparent they are, how much the illicit finance they can do. And so once you reach that understanding, the way that President Trump did, I think you go in with that understanding, you go in that direction. So I do think that understanding still doesn't exist, but it's rapidly growing, and we're doing a lot to make sure that it does.
We got to let you go, but I have to ask you this morning, we heard Patrick Witt at Ripple Swell say that market structure will pass by the end of the year. Do you think that's possible given the conversations you've been in?
I think it's possible. Yeah, it's possible. I think the government needs to turn back on. That's going to be needed a little bit. I don't know if they have lights there in the room where they do the votes. Do the voting things work? Like they need to turn the government back on. That's a factor. But I think there's only 1 or 2 issues left to hammer out. So I do think it's possible.
Sergey, thank you so much for having us at the event, and thank you for
My
joining
pleasure.
us to kick off the stream.
Thank you for having me.
Thank you, Sergey.
That was Chainlink co-founder Sergey Nazarov. We are going to take a quick break. We'll be right back. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters. Welcome back to CoinDesk Live from Chainlink SmartCon. Our next guest is the head of eToro US, a trading and investing platform with over 40 million registered users from 75 countries. Andrew McCormick joins us now. Andrew, how is it going?
Doing great. So wonderful to be here. Thanks for the time. What a wonderful event.
Yeah, it's been awesome. We've been having a blast here at the desk. We know you're speaking on a panel later called Convergence in Motion, where crypto and capital markets collide. That title really kind of encapsulates the conversations that we've been having here. Capital markets, crypto have kind of converged here at this event.
Absolutely.
Talk to us about what you hope to come out of that conversation.
Yes, we had it a couple hours ago. It was great. This is one of my big passions. I was on Wall Street. I loved it. It was a great experience, but I'm passionate about innovation, bringing finance to everybody, democratizing it. And I love the idea of bringing these worlds together, TradFi, DeFi, making it just finance. And then in the future, we don't have to keep saying TradFi all the time in these awkward words, but it's amazing to see institutions here, the old school crypto fanatics here, and working together to build a better system that is better for everybody.
It really is the future of finance. That all the conversations we've had have been really about the future of this financial system that we currently operate within. I'm curious to hear from your perspective. eToro kind of takes the social angle when looking at finance. Where does that come into play when we think about the future?
Cool. Well, look, life is better when you do it together. And there's power in community. And whether it's looking for recipes, parenting tips, vacation ideas, where do you go? You go to social media. So why not the same for investing? And so that was the DNA of eToro, that if you want to have questions, talk about markets to people all around the world, come to eToro. You can talk, discuss, see what other people are doing, and learn, and then trade if you want. And again, like it works for recipes, travel, finance too, right? It should be something that's part of the common consciousness and what we talk about with our friends, family, and eToro is a place to do that.
Andrew, I've been at CoinDesk for 4 years. You guys have always been partners of ours and been involved with the platform. It always struck me how, you really took a very base level approach of we can bring everybody into this tent, and I think eToro does a great job at that. When we look at the social side, I know there is the angle of what can we do together as a group, but also there's this trend coming that I want to ask you about of more people doing copy trading, looking at successful portfolios, whether it's Nancy Pelosi or a Logan Paul, right? You can just choose someone and say, I just want to do what they do because maybe they know more. Tell us about the ideas around copy trading and how people are looking at maybe utilizing other people's insights to better their own investment strategies.
Yeah, the best way to learn is from others. And maybe your own mistakes, but even better if you can learn from other people and what they've experienced. And copy trader is a huge part of eToro. We just launched it in the US last week. So it's 1 week old here in the US. So we're really excited and proud about that. And we have a transparent platform where you can look up users, see their history, their wins, their losses, their performance, their risk. And if you say, hey, that lady, that guy, I want to do what they do with part of my portfolio, you can do it. And if you do it, and it's awesome, great. If you decide change your mind, keep the investments. But just going to the idea of learning from others is a great way to do life. And sometimes you win, sometimes you lose, but hopefully you learn from it all. And it just makes it more fun too.
It sort of reminds me of, back in the days when I remember seeing kids, my child was this, where they were obsessed with watching people play video games, right? It's like, I used to grow up playing video games. Now you're watching others play on YouTube. And to me, this is actually kind of a very logical next step, which is I want to learn how to do by watching others. And I might not understand enough about this type of protocol or about this type of token or this exchange, and now I get to sort of play in that game. So do you think there's also a psychological of like feeling more comfortable that I get to learn from somebody, that I get to play in the game with them?
Absolutely. So I think the ideal is everybody's investing something. It might be a lot, it might be a little. The two blockers to get started are education and empowerment. Education, we got tons of resources on that. People explain what these markets are, what different products are. The second one is empowerment. Like, hey, I've learned this. How do I get started? That can be really hard to do. Take that first step. Copy trader is a great way to do that. You can make an investment on eToro for as little as $10. So some traditional platforms, if you love a certain stock, a crypto asset, you might need hundreds of dollars, even thousands at times. But what a great way to get started with just $10. You learn, you experience what people are doing, and you keep going. And it's just a great way to start that journey.
We're at a Chainlink conference, so I got to ask this. What is the future of this social investing look like to you? I mean, like, are we heading in a direction where a user's copy trader portfolio is actually a smart contract that can be executed on some kind of verified data?
I think eventually we're heading in that direction. Yeah. AI is going to be a big part of everything that we all do, but I think it's important that the human is always in the driver's seat with that great assistance to your left or right, whether that's your community or AI or a mix of both.
I got to ask, you were the VP of Regulatory Enforcement and Litigation Counsel at Morgan Stanley.
Yeah.
So going from there to an eToro, like, what was your biggest, like, both aha moment and like, wow, what did I enter?
Yeah, severe culture shock.
Yeah.
I love being at Morgan Stanley, loved that experience, and suddenly I woke up with 1,000+ friends around the world from eToro. But a huge difference when you're being at a bank that has 80 years of templates, copy paste, risk committees. So you're jumping in the middle of it, and you're trying to learn as you go. But it's been a wonderful journey, and I've learned so much. And we're always trying to innovate and always keep at our heart. Do what's best for the customer.
Had you dabbled in crypto before that? Or?
Oh, for sure.
Okay.
Yeah,
foreign to you.
Ironically, my dad got me into the space, and I picked it up in like 2017. And I was at E-Trade and Morgan Stanley. I was like the crypto guy, banging on doors, but it wasn't the right time for institutions. And so I'm especially excited to see them come into the marketplace now. So
we were just talking to Sergey about what he's watching when it comes to progress with legislation in the United States. Given your background, what are you watching? What's most pertinent to your business?
Yeah, so spend a ton of time and energy thinking about this. Obviously, Genius Act passing in July. Since then, it seems like every week there's some new initiative, M&A deal. We need that for market structure. I think it'll hopefully come in the next couple months. But I think what's really important, we have from the SEC a lot of great speeches and guidance. We need something harder. We need rules that when an election happens again, it can't just be thrown away. So love the speeches, love the guidance, love the kind of informal dialogue and temperature change, but really need that legislation and rulemaking to cement America as a leader in crypto forever.
That's a really important point, and I think, Sam, to what you and I were alluding earlier, we need rules. Because just like what you said, anyone can come in, and this could go a totally different way, regardless of who's participating in the industry. So I think that's a very valid point.
Yeah, so let's hope it happens.
Andrew, thank you so much for joining us at the desk.
My
we hope
pleasure.
you enjoy the rest of your day.
Yeah, likewise. Thanks so much.
That was head of eToro US, Andrew McCormick.
Well,
our points are being validated, Sam.
I love when we kind of hit it. Maybe not out of the park.
Yeah, we didn't hit it out of the park, but we hit it.
You got a ground rule double there, yeah, for sure. What's interesting, I think, also is there's a trend we should not ignore, which Andrew has embodied, right? He was at enforcement regulatory at Morgan Stanley. Now he's here in the crypto space at eToro. That to me is an example of what we've been seeing day in, day out at this conference, which is more people in TradFi saying, I got to be over here. It's more exciting. It's interesting. I get to chart the financial future, as Sergey was talking about. To me, that's the exciting thing about being in this industry, is that every day we just see more and more people light up and say, that's the place I want to be and spend time.
It's so interesting that you point that out, because so many conversations I've had here have gone that exact way, right? many of the C-suites and a lot of these companies that are being driven by crypto come from TradFi, and they wanted to build here because there weren't as many rules, and they saw that opportunity. And I think that's really validating for some of the folks who have maybe been heads down building in the space for a long time to see that the worlds are really kind of coming together, and there is light at the end of the tunnel. And the reason I say there's light at the end of the tunnel is because for a long time it felt like there might not be.
I want to double click on what Andrew was saying though at the end, which I think was probably a point we need to talk more about in general today. But you have something like the Genius Act passing, which the real goal is the aim to create rules. Rules,
exactly.
Right? So yes, it's signed into law. Yes, it's like a big step, and we should not downplay that. But I think people are now saying, how does that actually look? Because we hear from people on different sides that say, it's going to be hard to get those rules in.
Yep.
Others who say, no, this is really the beginning of a waterfall of opportunity. What that looks like, I think, is still open. And so I think that's where we have to think about, and as you asked that question about market structure, I think that those probably are the sticking points that Sergey was alluding to, that we need to figure out what these things are, not just that there are going to be things.
Well, every step is hard. I think that's not talked about enough, right? Every step of this process is hard, and so I understand why we celebrate every step, right? When it comes to market structure, the real sticking point to what Andrew was saying is, if this doesn't get past the line, if there isn't guidance to creating those rules, anyone could come into office and say, you know what, we're actually going to revert back. Now, it's unlikely. I hear a lot of people saying it's unlikely. We have BlackRock's here. We have Morgan Stanley here. It's unlikely that happens, but I think we've seen similar situations before.
I agree, and I think that we are a little too far down the road for us to completely reverse. And I
agree with that.
And I think that that's important for us to acknowledge. Is it took us years to get here. I made the point, I think, yesterday on one of our chats, that if you looked at the moment where MP3s first came out to today, where the dominant players in music are streaming systems, that arc was about 20 years. We are 14, 15 years into this journey. It was really, it was a wild west time in the first 10 years, but the last 5 years have been an amazing way to say this dream a lot of people have become reality. So I'm interested in understanding, if things were to, change under a different administration, just how far back would they go? Because I don't think you can put this back in the bag.
I don't think you can, and like we said, it's no longer a separate conversation. It's not TradFi and crypto, it's just the future of finance. And like Sergey was saying earlier, it's not just all this degen stuff happening, it's like infrastructure that is supporting the financial system that already exists and solving real problems for them. So I agree with you. We don't go completely back, but we need rules.
In addition, we have so many companies out there that have billions of dollars under management. We're about to talk to one of those right now. And I do think they probably have a good sense of what also the public and institutions are asking for. So I think we should get to that.
All right, our next guest joins us now, co-founder and executive chairman of Maple Finance, Joe Flanagan. Joe, welcome.
Thanks so much.
All right, you heard Sam's first question. Okay, go for it.
Well, yeah, I mean, my question for you is, you guys have close to $5 billion under $5 billion of assets under management. Tremendous amount of money. There's so much more out there in the world, and the hunger for people to get into this industry seems very, very deep. So, as you look at that and what's happened in the kind of regulatory space, is this only just all all jets ahead? We're focused on the future.
Yeah, absolutely. I mean, as you point out, Maple's been able to scale from about 500 million at the start of this year to now 5 billion in assets under management. And the thing with us that maybe differentiates us from a number of others is that our focus is on bringing some of the institutional quality yields into the DeFi landscape. And so that's been the thing that's been able to really separate us, is that we take our backgrounds in traditional finance, take our understanding and lessons from that. We don't obfuscate that away or say there's nothing to learn from the way that things are done in traditional finance, and bring that into a DeFi landscape. And then we're able to utilize all the benefits that crypto markets, that DeFi can enable through blockchain technology for access to these products.
We hear often about the bad parts of traditional finance that crypto and blockchain can solve, but what are the good parts of traditional finance that can help solve some of the problems on the other side?
Yes, I think it's really important to note, that traditional finance has been around for a long time, and there's many things that we can learn from it. And I think the one term that didn't exist last cycle that you hear now is risk management. And so there's now starting to be this prevalence of, okay, what are the things that we're doing to mitigate risk? And for Maple, that's over-collateralized lending to large institutions. That's our bread and butter. And so what we think about is, okay, how are we going to facilitate that at scale? And that's what DeFi enables. But it doesn't mean that you turn off risk management. And so I think that we're starting to see that in the current market environment today, is that there's a difference between those that are managing risk prudently and utilizing DeFi in the right way, and those that are getting a little bit of ahead of themselves and looking to access more capital only by juicing yields and taking on more risk.
Joe, I want to ask you about yield. I think, I remember, this is going to go on 3 or 4 years ago, I think it was Circle who was offering a really great yield reserve, and they were focused on the fact of just companies should just keep their excess cash in this as a way to generate. Now we see yield everywhere, and sometimes at rates that are pretty impressive. How long do you think that lasts? Do you think that is just like from now evergreen? Or is there at some point where TradFi starts to say, how exactly are these yields working, and is this something that's sustainable?
Yeah, well, I think the sustainability question is the main one, right? And so a lot of that yield comes from points, token emissions. These are the things that are juicing the yields. And then you also combine in a lot of leverage that is existing through DeFi. And so you may have seen in the last 48 hours, there's been a bit of an unwind of some of that leverage. You have the October 10th events that then parlay into a couple of more catastrophic events for a couple of DeFi protocols, and it's meant that there is this big unwind. And so people are kind of looking at it now and saying, well, what is genuine yield being generated versus Ponzonomics or things that are coming only from token generated yield? And so there's very few protocols that are operating at scale in the space that are actually generating real yields. And that's what Maple's over-collateralized lending to institutions is able to provide, is that there's that genuine yield source that then is coming into the DeFi ecosystem, and then people are able to build on top of these assets. And so that's really our commitment to the space, is to bring these high quality, institutional quality yield products to the space, and then others can build on top of it and utilize the building blocks of DeFi to facilitate the financial system of the future.
Can I just ask, one follow-up question to that, which is, it sounds like what we're also saying is not all yield is equal.
100%.
Right? And so there's some that you can maybe trust more. I remember back in the old days of, 1,000% APYs over the course of a year, and you knew it wasn't real, it's just whether you could get in and out quick enough. You guys, for institutions, I assume, they need to be able to predict their balance sheets a little better than that.
Yes, exactly right. And so there's actually, we would say, something in having a lower yield. There's you can represent, I've got 25% plus yield, and everyone go, really? And so now with us, because we're operating at such a scale of 5 billion plus, and we have this consistent track record of just offering 6 to 7% yields on repeat. And so that consistency and track record comes with a lot of trust. And so we've built that through time, but there is some real value in actually offering a lower yield than necessarily offering a higher yield where it's just going to be capital in, capital out very quickly.
I want to zoom out and talk about those October 10th events that you just mentioned. The market has really kind of failed to recover from that event that was triggered by some geopolitical tensions. Talk to us about how you're watching the markets. I believe Bitcoin was at around $104,000 the last time we checked. What are you watching? Where do we go from here?
So I think you've seen a little bit of a bounce in the last 24 hours, but there's been a real re-stress of everything post-October 10th. And when you have such a violent event like what happened on October 10th and the biggest liquidation in history, it's natural that a couple of weeks later you actually start to see the repercussions of that. And so what we've seen is that there's a lot of fear around of, well, who actually lost money in those events? Which market makers lost money? Where have the liquidations have occurred? And it takes a little bit of time for that information to flow through the system and for people to transparently report what those things are. And so that's what the last 7 days have been, is people trying to uncover who has been impacted by those October 10th events. And so I think it's interesting to see 5 days of consecutive outflows from ETFs. You're also seeing long-term holders of Bitcoin over the last 5 days have been the sellers, and it's been new Bitcoin entrants that have been picking up on the other side. And so this speaks to shaky markets overall. And I think if you have a bit of a leg down on the AI stocks and broader markets overall, with the continued theme of the government in shutdown, we could be down for in for another leg lower from here.
You were the CFO at a fintech company that went public. You kind of have been through that process. We've seen a tremendous amount of IPOs in the crypto space on public markets recently. What's your take on sort of the IPO landscape for crypto companies?
Yeah, well, I mean, you've seen a big rush, over the summer of people trying to get in and make the most of the markets, as well as obviously all of the DATs going to market. And so that's been a big theme that's definitely slowed down. And so you've seen over the last few weeks as well, a lot of trading under MNAV, and then this whole theme now of people looking to buy back their stock. And so we think about it, we want to be operating more and more like a public company. Maple is a token-only project. That is where all the value accrues to. And so we are doing things more and more now like a public company. So next week we will have an earnings call and we will run through the state of the ecosystem and the state of the protocol. And so we want to take some of those lessons from the public markets, the disclosure, and start to build that and kind of lead the way in the way that DeFi and token-only projects should be producing these things for investors, because that level of transparency is what we have represented as an industry, and it has to be in all facets of our business, not just in the select ones that we want.
You mentioned some of the data that came out after that October 10th liquidation. Two things I want to say. Biggest liquidation in history, bigger than FTX. And what a sign of the times to say we're sitting here, we're having very positive conversations about the industry despite that. The data point I want to touch on is long-term holders of Bitcoin selling. What does that signal to you? How do people who are watching at home make sense of that event?
Yeah, I think it's just an interesting data point that we track. And so, it's not like a big cliff event, but you can definitely see it starting to trend downwards. And so, this 100,000 level has always been like kind of the bogey that we wanted to get past. And so it'll be interesting over the next few weeks, are we able to maintain those levels? And so I think that'll be the real support level that everyone looks at, because there is just kind of a mental aspect to it, right? 100,000 is a good number. We want to stay above it. And then we'll see if we can have a bit of a rally going into year end. But I think the next few weeks will still be a little bit shaky as more is uncovered from the October 10th events.
Joe, let's change topics. You're on a panel building winning products in a converging world, right? Yes. What are the top 2 or 3 things that you think that these projects need to do in order to win in the crypto product today?
So the few major things that we focus on is, one is, as I spoke about before, bringing those institutional qualities to our yield products. And so that's first and foremost and what we think differentiates Maple. Then the second is leveraging what are the actual benefits that DeFi markets enable. And so I think sometimes we get lost in just like trying to access as much capital as possible and lose sight of the innovation that's possible here. And so with the proliferation of stablecoins, you now have dollar equivalent bank accounts spread all over the globe for everyone to access. And yes, it's been great that there's lots of stablecoin proliferation and growth, but what are we doing with this stablecoin growth? How are we plugging that into DeFi markets? And so I think that is the real challenge to everyone at this conference and to the broader DeFi ecosystem, is that we have a real opportunity that you can say that stablecoins are going from 250, 300 billion today to $1 trillion this cycle. Well, this is the opportunity for us to build the financial system to take in that growth. And the way that we do that and the protocols who lead that charge have a real responsibility to be managing risk along the way, and that's what we're committed to at Maple.
Joe, thanks so much for joining us at the desk. It was a pleasure.
Thanks so much.
Thanks, Jeff.
That was Maple Finance co-founder Joe Flanagan. We are going to take a quick break. We'll be right back. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters.
Hello and welcome to CoinDesk Live. We are coming to you from Chainlink's SmartCon in New York City. I'm Jen Sanasi. That's Sam Ewan. This is the convergence points for the world of blockchains and finance, where capital markets leaders, government, and policymakers join DeFi pioneers and on-chain builders to invent the future of global markets. We're now joined by the head of institutional growth at the Solana Foundation, Nick Dukoff. Nick, welcome.
Thanks so much for having me. Hey, Nick.
Hey.
I spoke to Matt Hogan recently. He's the CIO at Bitwise, and he called Solana the new Wall Street. And I gotta get your reaction to that. What does it mean for the Solana Foundation, the Solana ecosystem, to hear someone of that stature saying, you know what, this is the future of Wall Street?
Well, it was a really special moment last week. The Bitwise team invited some of the folks from the Solana Foundation, the broader Solana ecosystem, to ring the closing bell at the New York Stock Exchange. And the thing that Anatoly, one of the founders of Solana, said at 4:01 p.m. was Solana's still open. And so it's terrific that Solana is now available via ETF wrapper, to investors all over. But Solana is 24/7, and anyone in the world can trade on Solana, any asset, any time in the day.
Nick, I've known you for a number of years. I think, thinking about when you first started at Solana to where we are now, it's been a wild ride. What for you are the takeaways when we look at a conference like this, the prominence of Solana in the sort of top crypto token ecosystem? How has that felt for you to be on this rocket ship that's called Solana?
So I think we love being the underdog, and we still very much feel that way. If I had a nickel for every time I was told that Solana was dead, I'd be rich. But we just had a panel here at the Chainlink SmartCon conference about Solana, and it was State Street, CME, and Galaxy, and they were saying, what's different now is that they're getting the pull from their clients to come to Solana. They're not having to push or sell Solana. It's clients coming to them and saying, hey, how can I get involved? How can I be part of the exciting growth that is happening in the Solana ecosystem? And I think that is just an incredible place to be, but only the paranoid survive. There's not a moment that we stop, kind of worrying and thinking about competition and making sure that Solana is the absolute best blockchain and best technology platform for builders all over the world and people to use it every single day.
The meme coin narrative was one that was very prevalent on Solana. I think it still is. I'm curious to hear how institutions are interpreting that. Is it something that they even make note of or are concerned about?
Yeah, I think meme coins have been great for institutional, which is maybe a surprising take, but when the Trump coin launched in January of this year, it proved unequivocally that Solana was ready to operate at the scale needed by institutions. You had billions of dollars flowing in, you had millions of people transacting on the network, and it completely was resilient. And I think that's the type of expectation that institutions have for their infrastructure, and they saw that Solana was institutional grade and ready, and that's why people like the CEO of Western Union just this past week at Money 2020 said, I chose Solana because when we were looking at all of the chains that we could build on, Solana was the institutional grade one, best for us, best for payments, and I think you're going to hear that over and over and over again.
And I remember, back in the day when Anatoly would first talk about Solana, he really talked about replacing the order book. He wanted this to be, tens of thousands of transactions per second to be able to compete with Wall Street. And it sounds like, along that journey, you guys are pretty close. I'm interested, you focus on institutional, but you can't walk outside in New York City and not see a Solana ad right now. It reminds me of the old days when when the Amazons and the Apples are advertising. You need to let people know your brand exists.
Absolutely.
And I think you guys, to your point, people are asking these mainstream financial institutions, where can I get Solana? How can I benefit from it? The ETF, I believe, is one of the fastest growing ETFs in our space that we've seen. With the recent launches. It feels like there's a lot of momentum going on, and this is a marked difference from a couple of years ago when people were counting Solana out. at that point?
I think there's still tons of people counting Solana out. I think it's still incredibly early, and everyone is welcome in the Solana ecosystem. I think that's one of the things that makes Solana really great. Is it's a global community, 80 million monthly users, 1% of the world's population. We still have 99% to go, but we're incredibly welcoming, and the community does so much. We've got activations via super teams in global markets all over the world, Canada, Europe, Asia, Africa, and if you're looking to get started in the Solana ecosystem, there's probably a local community that'll be available for you to help you get started.
Sam and I do events like this all over the world, and we're talking about global markets. Is there a particular region that you're seeing more interest in the Solana ecosystem from an institutional standpoint?
Since Trump was elected, it's so much activity is happening here in the United States, and of course, New York City being the global capital of finance, it's all happening here in New York City. I'm very fortunate to have colleagues, one in Asia based in Singapore and another in Europe in London, and we see activity coming from all over. Just this past week, just when the Solana ETFs went live, Grayscale and Bitwise here on the New York Stock Exchange, we also had one in Hong Kong, the first Solana ETF go live in Hong Kong. So this is something that's happening all over the world. But I would say New York City right now is the global capital for crypto, in large part thanks to the Trump administration for bringing back that innovation here domestically to the United States.
Can you reflect a little bit? A year ago, if we were having this conversation, your job was probably much different. You're trying to convince people why we actually matter. Now you're saying we're almost fending off all the people who want to talk to us.
I don't want you to get that impression.
He's like, still come
like,
and
no,
talk to Nick.
Yeah.
But I guess in terms of, we've talked about the regulatory opening that has created the crypto industry to thrive where a lot of us were hoping it was going to go. As you look, in the future, do you agree that we need to make this more bipartisan, that we need to stop talking about the politicization and really focus on the innovation? Is that where we should be focused right now?
100%. I mean, so much is credit, and the credit is due to the Trump administration, the executive branch, for the moves that they made there. But Genius Act was a legislative action, a bipartisan legislative action, and I think that was incredibly important. Because stablecoins is something that every financial institution, whether you're a bank, an asset manager, fintech, anybody, can utilize stablecoins. And like the green kind of go flag has definitely been waved, and everybody is racing as fast as they can in that direction. I think Clarity Act, if that gets passed, will have the same type of impact, and I hope it does. But in any event, it's very fertile ground right now for innovation, thanks to the executive and legislative branches for being more permissive to this type of blockchain and crypto activity.
Sam mentioned the success of the ETF. You were at the New York Stock Exchange with Bitwise celebrating BSOL. How did you celebrate? I mean, that was a very big week for Solana.
It's still day one. It was a special moment, and I'm glad we took the moment, to recognize, everything that's gone into getting to that point. But there's so much more future ahead of that point than there was to get us there, right? And, Toli and Raj, who were both there, the co-founders of Solana, emphasize that, this is just the beginning, and there's so much more to do, so much more work to do, so much more to build. There's kind of a meme in the Solana ecosystem, one more hard quarter, and, just one more hard quarter.
Nick, thanks so much for joining us.
Thank you so much for having me.
That was the Solana Foundation's Nick Dukoff. We are going to take a quick break. We'll be right back. Thank you. Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at CoinDesk.com/newsletters. Welcome back to CoinDesk Live. Our next guest represents the central nervous system of the U.S. financial market. When we talk about moving from pilot to production, this is the institution that makes that all possible at scale. We're joined now by Nadine Shakar, the global head of digital assets at DTCC. Hello.
Hello there. Hi there.
Let's just start here. Lay a foundation for us. Talk to us about your digital asset strategy.
So our strategy in its most simplistic format is we aspire to be digital market infrastructure, the same way we're financial market infrastructure for traditional assets. And the thought process is fairly simple. Not everything's going to be tokenized at once, right? So for a long period of time, we're going to have to manage digital securities and traditional securities, so we want to exert the same level of care and protection on digital assets as we do with traditional assets, and that should hopefully be the bridge between TradFi and DeFi. I know it's an overused analogy, but that is the aspiration.
What do you see as the parallels of what you're building now compared to in traditional finance?
So the existence of DTCC came out from what used to be known as the paperwork crisis back in the 70s, and the industry came together and created DTCC really to deal with scale and simplification of middle and back office activities. And as you propel forward right now, we have, for the past 10 years in an industry, been trying to build infrastructure, and we do. We've had fragmentation of infrastructure everywhere in the marketplace, and we complain that there's no scale, there's no adoption. So DTCC is the only we provide the financial settlements for the US. We're the only organization to do that. So over the years, we've been able to consolidate and doing so, and that's what we hope to do today by just bringing all the parties to work together on similar standards, So it doesn't mean like when we're looking for standardization, it's one platform. It just means that we can replicate what we've done historically, but now do it with new rails, with a new purpose as we move forward.
We've been talking a lot about infrastructure here at this desk over the past 2 days. And like you said, everything can't be tokenized all at once, right? The infrastructure needs to be built, it needs to be strong, it needs to be sound. What are still some of the challenges ahead for building that strong, sound infrastructure that can support a tokenized economy?
It's an awesome question. If you look at what we do today at DTCC, we settle $4 quadrillion of assets a year. That's 15 zeros, right? There's no blockchain today that can handle that. So you're just looking in pure technical terms, we need scalability, right? We need to be able, like our CTO will say, we need to be able to process 1 million transactions a second on blockchain. We're nowhere there yet. And this is where DTCC's role, because we're not out there competing, right? We're not looking for the sexy, shiny app. What we're looking for is to put really solid foundation around security, around privacy, around scalability, and we're bringing the industry together. Not a lot of people know that. We are owned and governed by our members. So everything that we're doing with the market, for the market. And we still have a while to go. But there is enough today to allow us to move away from speaking points to proof points. And we hope in 26, it's the year that at least DTCC will start to scale up and help our participants execute on their digital ambitions.
I think for our audience, it would be great. I think about the sort of history of crypto being very peer-to-peer, right? I send you $10 of Bitcoin, you receive it in your wallet a couple minutes later. We don't think about settlement. We just think about the idea that I paid some cash and I got something back. Tell us the role of settlement, especially as the institutions come in. Why do they need this? What does it really give them a comfort for in order to know that there's a group like DTCC behind crypto and blockchain as well as securities?
I joke around and say actually DTCC was the original atomic settlement, right? We're a clearinghouse, so for every buyer there's a seller and every seller is a buyer. And in atomic settlement, it's exactly that, but you do it instantaneously, right? So there is no settlement risk, there's finality of settlement that occurs. And that's why it's important when you're dealing with large institutional monies. Things could get hijacked into the process, a trade. For example, you can't secure the assets or the money gets stuck somewhere. So that's why having a clearinghouse sort of, at the end of the day, we net to zero, everybody's happy and the markets continue. So I would tell you that in the original phases of what we're all doing is settlement is happening somewhere else. And we are moving things wallet to wallet to begin with. And then over time, we will start to look at the possibility of doing atomic settlement at scale. However, we could do that today, but just because we can doesn't mean we necessarily should. We're talking about, unlike the retail markets, there are lots of volume going through. So we've got to make sure that we think through all the unintended consequences of doing atomic settlement. And my guess is that at the onset, we'll see what we call is dynamic settlement. There'll be certain assets and certain transactions that you can settle real-time atomically, and certain that will probably be T+1. And you had Nick here a few minutes ago. He talked about some of their trades going into T+2. So there is reasons of how you manage the settlement process. But again, as an industry, we always tend to figure it out and make sure that it works for almost everybody, and that's the intent.
How's DTCC working with Chainlink?
So we love our relationship with Chainlink, and we've done a couple of things together. So obviously, we are big believers in data, and I think you're aware there was something called Project Calm that we, along others, talked about at Sibos back in the fall. And there are, Sibos corporate actions are really hard to process, especially in our case, we're trying to process them on chain. So our contribution there was working with Chainlink, is embedding our tokenization, our data tokenization framework to have better data management and better schema, which is essentially a good standard to do that. So data management is where we're working with them, along with some interoperability. So we view Chainlink, and we love the relationship with Sergey and pretty much everybody here. They've been an essential partner for DTCC, and I think you're going to see us work with them more and more as we move forward. So,
I guess, my final question for you is, you talked about in the quadrillions of billions of dollars in terms of assets that you guys touch. One, what's the name after quadrillion?
I have no idea.
And are you
so
prepared when crypto comes in?
Listen, we are a highly, highly regulated organization. So I know you've talked to a lot of banks during the day and what have you. So take their regulatory framework and multiply it by 10. And it's understandable. So we will need to work within the regulatory framework, work in partnership with our regulators. I am hopeful that someday we'll be ready for crypto from an ownership perspective. Our platforms do support it. Our platforms are asset agnostic, L1 agnostic. But for right now, we're focused on real world assets and hope for a crypto future, but that's still a whiles out.
Nadine, thanks so much for
My
joining
pleasure.
us
Thank
here.
you so much for having me.
Before we go to break, Sam.
Yes.
I think it's quintillion.
Quintillion?
That's my guess. What's yours?
I was going to say centillion, but I'm
that's
sure
probably
that's
right.
wrong.
Well, we just had the global head of digital assets at DTCC, Nadine Shakar, join us here. We're going to take a quick break. When we come back, we'll have the answer for you. Stick around.
Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters.
Hello and welcome back to CoinDesk Live. We're coming to you from Chainlink's SmartCon. Before the break, we asked you what comes after quadrillion. Sam has an answer.
The answer is quintillion, which is 10 to the 18th number of zeros.
I think I was right.
You're right.
Is what I'm taking away from that.
Yep.
All right, well, more trivia coming up later. Our next guest sits at the intersection of traditional finance and the on-chain world. He's the CEO of a regulated crypto-native custodian that is also a core part of one of the largest exchange giants in the world. We're thrilled to be joined by Stijn van der Straten, the CEO of Crypto Finance, which is part of Deutsche Börse Group, who we had on the show yesterday. Hello, Stijn.
Hi.
Hey, Finn.
Tell us about Crypto Finance.
Yeah, crypto finance, we started as a typical startup in the crypto space, and we basically provide large financial institutions with crypto services. So for example, if they want to have a crypto offering, we facilitate the trading, we facilitate the custody, infrastructure, we advise them out of Europe, obviously, as part of Deutsche Börse Group. We started out in Switzerland, where we still have our headquarters, but also have offices in Frankfurt.
And I assume your eyes are open to the rest of the world as it comes in?
Absolutely.
What is the service you think that institutions are needing most from you guys right now?
Right now, I mean, in Europe, we see the vast adoption of crypto in the retail banking space and in the wealth management space, right? So every bank is looking for the crypto offering as an asset class. And it's plain vanilla. It's Bitcoin and Ethereum in the first step, and then of course they look at staking, they look at open loop transfers and all of that. But in the beginning, most of them start with offering crypto to their end clients in a closed loop system. That's what we currently see them with the large financial institutions the most. And of course then the second step and the third step is then also this year obviously stable coins, right? Big topic with all banks, also on the payment side, and then opening up their ecosystem. Yeah.
You have a similar background to most of the people who have joined us at this desk today. You know, over 2 decades in banking, wealth management, asset management. What made you come over to the digital asset side? Was it just a natural progression?
Yeah, kind of, and a curiosity as well, right? I mean, the traditional banking system is quite old. We had it today in the panel. We discussed some tech is from the 60s, 70s, 80s, still on the mainframe. We still have faxes in some processes today, and settlement, etc. So yeah, it's progress. And then of course the curiosity and also the fun I had in the startup world. Yeah, that brought me actually to crypto.
We often talk about how fast it's moving, but I'd love to hear your perspective. You said there's some processes that still use fax.
Yeah.
I mean. Yeah. Is it moving as fast as we like to talk about when we're embedded in the crypto industry, or is there still a big part of the industry that needs to be modernized?
Well, my opinion is that there is a lot to be modernized, right? But it is a big dinosaur to a large extent. But this is also due to the fact that it's a highly regulated industry. If I look where my budget is going and how much goes into legal and compliance and dealing with regulators, that's a large portion. I rather would spend it on development and new technologies, right? From a tech side, a lot is possible. We can do almost everything, but then we are operating in these boundaries where I have to adhere to the rules, right? Which block me. Also, for example, DeFi, brilliant example. I love it, right? It's so much more efficient, so much opportunity with it, but then I cannot bring it in that today into that regulated space, right? It's going to take another 5 to 10 years, I would assume, to do all that education that we did in like 2017, 16, 17 with the regulator bringing Bitcoin into banks, right? Big story. So we achieved that, and next thing is, of course, tokenization and then all the DeFi space. Yeah.
I mean, we were talking to Maple Finance earlier. We talked about one of the really most attractive things for their institutional clients was staking.
Yeah.
As you mentioned, DeFi really is a revolution once you understand it.
Yeah.
But the regulatory doesn't really understand what that means yet. So, similarly, are you seeing an institutional desire to be able to put their money to work in a little bit more of an efficient way than they've been doing in the past?
Yeah, absolutely, absolutely, and it opens up new opportunities, right? We discussed that also today in the panel, and I had the discussion where I was asking the bank, look, would you take Bitcoin as collateral? And they were like, no, it's way too volatile. But that's, from my perspective, looking at it the wrong way, because Bitcoin is 24/7 traded commodity, if you want to call it that, right? So that means you even can monitor your collateral on the weekend. You can't do that with your normal Lombard loan. So actually it has benefits. Of course it's volatile, but we can deal with volatility, but it opens up new potential possibilities, 24/7 trading, settlement, etc., etc. So yeah, absolutely, absolutely.
But let me, what's always astounding to me is I can say Google stock is volatile, and I can say my real estate is volatile, and I can say cash can be volatile.
Absolutely.
Right? So what do you think needs to happen for the regulators to sort of understand that, yes, any asset has a volatility built into it.
Yeah.
And what do we need to know in order to be able to correctly regulate it?
Yeah, I mean, the regulator, from a regulator standpoint, right? They are looking to protect the consumer, of course, right? I don't think it's much about volatility. It's also when it comes to DeFi, right? Where we tend to hit boundaries with the regulator is when it comes to how do you make sure that you know where the payment is coming from if you receive the payment decentralized from an oracle, for example, right? Where is that money coming from? How do I play with the FATF rules on anti-money laundering, anti-terrorist financing, etc., that this money is not coming from a country that is, for example, sanctioned, right? And here, and then if I try to work around it, I limit my DeFi again to an extent where I lose the competitive edge, right? And this is where we currently struggle. But we will overcome that. Right, we will work around that. We will work towards that, and we will progress. I think that's the normal way how we progress. Yes.
We spoke earlier on the show about here in the United States, folks who are writing crypto legislation, there being an education gap when it comes to DeFi. Curious to hear what's happening with regulation in Europe when it comes to DeFi. Is the industry engaging with policymakers in the same way that they are here, and what kind of progress has been made?
Well, I think the game in the US changed a lot with the new administration. The US got lucky here, so we see now a lot of innovation putting to work, of course, in the US. In Europe, now with the MiCA law and everything, I mean, we have a good relationship with the regulator, and it is a lot of education, and we try to argument principle-based, right? So we look at the traditional business and then your crypto, DeFi, how could we put that in a model that makes sense for the regulator and is in common sense, right? To also from a risk perspective make it work for the regulator. And but it's a lot of education. But to give the regulator also credit, in Europe, they learned a lot over the last 5 to 7 years, right? Massively. But I still think the environment in the US currently is still much more open,
Do you think we're going to see firms from Europe maybe move over to the United States because of this regulatory maybe advantage that we have now?
Yes.
Yeah.
I mean, all firms are looking how can we get into the US market, right? The US is a big market, and now the legal risk, the regulatory risks are lower. There is more dialogue with authorities, right? That helps. But then again, I mean, it's not a strategy that you change from one year to the next or one legislation to the next legislation, right? What does the next legislation in the US look like? And is everything then put back stricter and you're going to get out of the US again? I mean, that's not how it works, right? So we are looking firmly on how we could expand to the US. What can we do in the US? It's not easy because every state has its own regulator, and then you have the CFCC and you have the SEC, and then it's unclear who is doing what and whatever. So that's a bit cumbersome and comes at a cost, of course, right? But then also on the revenue side, I think there is huge potential. So yes, that's under investigation, absolutely, with most of the firms that I speak to.
Stijn, thank you so much for joining us at the desk and sharing that insight.
Thank you for having me. Thank you.
That was Crypto Finance CEO Stijn van der Straten. We are going to take a quick break. We'll be right back.
Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters.
If you're just joining us, you're watching CoinDesk Live. We are at Chainlink's SmartCon in New York City. Our next guest is from TradeWeb, a global leader in fixed income processing, trillions in volume. Please welcome Chief Product Officer Chris Bruner. Hey, Chris.
Nice to see you guys. Thanks for having me.
Oh, yeah.
Thanks for being here. You spoke on a panel.
I did yesterday morning.
The data continuum, interoperability now, AI tomorrow. Talk to us about the conversation. What were some of the takeaways? And how does interoperability enable AI in the future?
Great questions. And we had a great panel, like really interesting set of folks. And so what we really talked about was how there's a huge transformation already going on, right? So TradeWeb, we're a big fixed income trading platform. We were around for 25 years, but we see this digital asset evolution as just the next step in electronification and enabling all these possibilities from the technology for trading. Not just new crypto assets, but actually a whole bunch of legacy assets. And in terms of how that plays and what we talked about on the panel, getting the data on chain is really what we started with yesterday. And so we're used to secondary trading, and so we don't have to worry too much about the data. It's just kind of generated from what we do. But if you want to start to apply other functions on the blockchain, you really need really solid data to enable those. Because one of the things that came up yesterday is the whole point of doing that is you don't have humans in the loop for so many of these new things you want to do. It's actually decentralized. As long as everything works the way it should and the data says that it's ready to go, you want those things to flow. And these are for legacy crypto transactions, but it's also for, say, tokenized treasury trading or tokenized ETF trading. And so what we talked about yesterday, and TradeWeb's super excited, we're starting to distribute some of our treasury data, which comes from our treasury markets, so one of the most trusted reference prices for treasury trading on chain. So it can be used for different purposes on chain. And so we're really excited by what that opens up. It opens up things like being able to trade tokenized forms of these securities. It opens up repo trading, which we're already doing on platform, where now you could do, say, a repo trade not just for a legacy asset, but actually to have stablecoin as the cash leg. And then we think that leads to more things like 24/7 trading, more instant settlement. So there's a whole variety of things coming to chain from the traditional finance world where we come from. And it's kind of a blend and a marrying of these new capabilities that have been out there for crypto only with a lot of the legacy assets we trade.
I'm interested in the second part of the title of your talk with AI tomorrow.
Yeah.
We've been hearing about AI trading algorithms for quite a while. It reminds me of kind of like the Flash Boys days where it was like, oh, the humans can never compete against the high frequency traders.
Right.
Now you're really competing against the robots. And I'm just wondering from your perspective, in some ways, I see this really being enabling institutions and retail to actually get best data in, best decisions out, based on a strategy of risk tolerance, right? Is that where you see this going?
In a large sense, yes, right? So we've been working on machine learning and AI capabilities for a couple decades now. And so this isn't new to us in some sense. What's new is being able to marry blockchain technologies with AI and then with trading capabilities and all the data around that. And so you're right, though, that doing that carefully is paramount. And understanding like who the users are, what their tolerances are, what their organization's risk checks are, is all really paramount to getting this right. Because I don't think anyone can have those standards go down as we apply more and more AI to our trading workflows. And so at TradeWeb, we've been doing a lot of that before we got to blockchain. We have automated trading technologies. We actually have AI already affecting our pricing and our data sets. And maybe some of those data sets will be distributing on chain, just like we are the treasury reference prices. And so one of the things we talked about yesterday, again, back to this human in the loop, is wherever you're applying AI, you're generally taking humans out of the loop. And so we think there's a really big opportunity for technologies like Chainlink, for blockchain. Once you have the right data on chain, then you can apply AI safely. Because you can basically come up with a step-by-step workflow where you know it's going to fail gracefully and not be a big risk issue. But those are not easy things to design. You need a lot of really strong technology behind it for these things to work. So we've done a lot of that in the past. For example, if you want to decide which dealers I should trade with and how I should route certain trades, should it be totally done automated? We have AI that helps us make those decisions already. And now being able to apply that in the DeFi world is just sort of another challenge. It's another step in that challenge. And so, again, you need the data that we're now starting to distribute, you need the legacy capabilities, and then you need blockchain as a way to understand the state. Right? And so blockchain's all about how do we have lots of participants in a decentralized way, know whether something's real or not real, or what state it's in, and then you can have multi-state transactions. And that's a lot of what we see the benefit for applying AI to these new types of workflows, is the AI will automate some stateful transactions, and then others it might kick it out to a human. And so we really think that like AI is here to stay. It's accelerating everything an order of magnitude. And so you need to be in the race running. And so that was part of why I think it was exciting to see us, FTSE, Deutsche Börse, just a really interesting set of organizations, right, on that panel yesterday, along with Digital Asset Holdings, who run the Canton Network that we're super involved and close to.
We've had a lot of conversations at the desk about what's working when it comes to the convergence of TradFi and blockchain, but what's not working? Where do those challenges still exist for you?
In terms of like, I wouldn't characterize it so much as what's not working. I more think about it as like we're building the Empire State Building and we're kind of on floor 2 or 3 so far. And so there are, challenges to getting that done that will take some time. And take a significant amount of effort. So again, I wouldn't say it's not working, but there's more for us, like all the threshold things that have to happen to get where you want to be. And so some of those things include if you're going to, trade tokenized securities, and we do believe in this future where almost every security you used to trade non-tokenized should be tradable tokenized and available either in wallets or convertible back to your old accounts, right? And so leveraging the old system with the new system to the best you can. But, deploying that technology to all the people that matter that want to use it, that takes time. And so being honest with ourselves, 90+% of institutional investors that show up every day to work and trade, they don't really think about blockchain much in their daily trading activities. So again, it's not broken, but how do you communicate that? How do you deploy the technology to them? How do they then shape their own organizations and processes to be able to leverage the new technology? This is all a lot of work we have ahead of us.
What I think excites me about these types of conversations is we, in the blockchain industry, have been hearing for years about how blockchain is going to revolutionize traditional finance. But I think the point you're making, which I think is an essential one, is that we have to also understand how traditional finance is going to affect blockchain. And that there's someone, raising $5 million, $10 million, $50 million today from some VCs who is trying to say, I'm going to disintermediate this opportunity in TradFi. But they don't know what you guys know from the decades you've put into this, right? So how much of that is also now a cross-learning back and forth?
I think it is an interplay for sure. And, it'll be interesting to see how this plays out. And we talk about this a lot. Like, I guess we never viewed ourselves as an incumbent, funny enough. We always viewed ourselves as the disruptor before blockchain came along, because we were always electronifying markets that were traditionally voice traded and really complex. And so it is interesting to see that flipped now, and now we're kind of viewed as this 25-year-old TradFi organization. But we see this as emerging for sure. We don't actually see this as one is going to disrupt the other. And I think what may be a little underplayed, and I think is a really interesting theme at this conference and was on our panel, is the response from incumbents in TradFi firms. They're not standing around. And so, and you could actually argue adopting the new technology may actually be easier than building some of the networks that these companies have, right? So if you think about an organization like DTCC that settles trades, right? They settle the back end of the equity market and all securities. They have trillions of assets that they're considering to bring on chain now, right? And so we think once those are on chain, then you can do really interesting programmable things and settle trades faster potentially and reduce capital charges and have new ways to post collateral and margin to different exchanges and clearinghouses and prime brokers once that collateral is available on chain. But it's interesting to us that these legacy organizations aren't standing around at all, right? And I think that's a really interesting theme to see. And now, but there is an interplay because there's a lot of innovation that occurs in blockchain that maybe we're not, as up to speed on or comfortable with yet, like decentralized exchange trading. That's all crypto assets at the moment. But I think a lot of people are going to be thinking about, well, should you have a similar protocol to trade, say, tokenized treasuries once they're available? And so we've always been about having a wide array of ways to trade and stable of protocols. So we're going to be looking at every lesson we can from these new technologies. And just as the crypto world has already been looking at every lesson from the last 100 years of traditional finance, and how can we replicate that in a faster, more scalable way? So I view it as emerging, just like probably AI I view as emerging as well. I don't think the robots are going to take over, but I think we may all have a Neuralink at some point.
I don't know if I want to see that day. We're in the single digits when it comes to floors on the Empire State Building. Yep. If you had to look to the future, how long do you think until we've built the whole thing?
So, a lot of the discussions we've had in our marketplaces were around 5 to 10 years as a horizon for lots of things. I'm not sure that's the horizon for much of anything anymore. So this doesn't happen in a year or two, though, right? This takes 3 to 5 years but I think within 3 to 5 years, you could see most of the legacy assets we trade, again, have a tokenized form of how they trade and maybe a legacy form of how they trade. And it's on all of us to help the client base and the end users bridge between those things. And so a lot of things happen faster in retail and true DeFi land. Institutional, it does take a little longer. But I feel like the timeframes, especially with AI and with the distribution of data that we have and with so many great technology choices available out there in the world already, anything you can dream up and think of and get the right participants around, I think you can do in 6 to 12 months now, where that used to take 5 years. So that's come down a lot. But it still takes probably 3 to 5 years to really revolutionize a lot of because our focus, again, is like really at scale institutional size trading. We trade literally trillions of notional on our platform every day across fixed income, rates and credit, equities, money markets. So if you want to be trading hundreds of billions or trillions at scale as safely as we do now, but hopefully at lower cost with better functionality, it takes a little while to wire that up in a safe way. But 3 to 5 years, a lot can happen.
Chris, thank you so much for joining us. That
Thanks,
was very insightful.
Very nice to be with you.
Thank you, Chris.
That was TradeWeb Chief Product Officer Chris Bruner. Sam, 3 to 5 years sounds very fast to me, honestly.
3 to 5 years, I could do a lot.
Could you build the Empire State Building?
I cannot do that. But I do think that these last few conversations have been really interesting and I think very eye-opening for me in what we were talking about with Chris. If you're at the Bitcoin conference, frankly, if you're at Consensus, certain areas of there, you don't have that conversation as much about how traditional market infrastructure is informing where blockchain needs to go. We heard Maple Finance talking about wanting to do quarterly reports and earnings calls, and yet they're not a public company. So to me, that's pretty fascinating, a way to think about this, that all of it is being, in essence, I wouldn't say merge is the wrong idea, but it's really informing each other.
It really is, yeah.
On how we're going to build this industry, and I think that's a wonderful insight that this last few days has brought to me.
Right, and the folks that are building blockchain can still learn from the traditional financial space. I think that's an important piece that you've just highlighted there, that everyone's learning from each other. Like, the whole financial system isn't maybe as broken as some like to say. There are definitely broken pieces. There are definitely places that need to be modernized. There are definitely parts that can be improved on, but it's not completely broken, and I think the learning goes both ways.
I mean, look, there's some in the crypto space that really want revolution.
Yes.
And that's, it was born out of an anti-government ethos, an anti-money, governmental money ethos. It was really about what if we reimagine the world completely differently.
Yeah.
And I think at this conference, some of the conversations we've had, a lot of people are saying, no, how do we modernize? A theme from yesterday. How do we make this better, more efficient, quicker, higher speeds, lower costs? And I think that's actually a really fascinating world that we're getting into.
And I think the revolution can still happen for the folks that want to participate in the revolution. That alternative system is there. It is being built. There are many participants who we have on our shows daily who are building that world. I think it's all about optionality.
I mean, look, the revolution is going to be tokenized, and there's probably no one better to talk about that than our next guest.
He's really good at these transitions. All right, let's get to our next guest now, Ondo Finance CEO Nathan Alvin. Hello.
Hello.
Nice to see you again.
Yeah, thanks for having me.
I know. Well, some big announcements, I think, since the last time you and I spoke. We've been talking all about tokenized finance. I know that you've been speaking on stage here. Talk to us about what you're leaving the conference with. What's that message you're leaving with?
Yeah, so 6 weeks ago, we launched Ondo Global Markets, which is our platform for tokenizing U.S. stocks, bonds, and ETFs in stablecoin-like wrappers. So you have to be fully onboarded with us to mint and redeem these, but they are effectively permissionless in secondary markets, and so they can be distributed through venues like crypto exchanges, decentralized exchanges, and we're really trying to take the playbook that stablecoins have run in making the dollar more accessible all around the world, particularly to folks in emerging markets, places like Latin America, Turkey, Southeast Asia, who might not have great financial infrastructure today. And we're trying to run that for stocks, bonds, and other financial assets. So that launched 6 weeks ago, and it's been a really exciting ramp. And we're at 400 million plus in assets right now. It's the overwhelming lion's share for this very nascent category, and excited to keep growing it.
What kind of traction have you seen, and where is the traction coming from regionally?
Sure. So our distribution is very crypto native to start. We've specifically focused on decentralized exchanges like 1inch and CowSwap, and they're plugged into a lot of crypto wallets, Trust Wallet, BitGet Wallet. There are a couple that come to mind. OKX Wallet is another big one. We don't actually know geographically where a lot of these folks are. We're it's so fresh off the press that we're still trying to get data from some of these wallet partners. But even in a permissionless environment, they don't know exactly either. So the theme is more crypto native than geographically located. But I guess that sort of hits at a broader trend, right? Which is that the old school way of distributing securities is a very geographically targeted one. I mean, securities clearing and settlement infrastructure tends to be very geographically localized, and crypto and DeFi are permissionless, global, 24/7, always on. Those are the features that we're trying to repurpose for traditional markets. So I think it's very appropriate that we have this very global approach, at least to begin with, as we start to narrow in on our focus.
Nathan, I think you guys put up this quote recently from Larry Fink. Tokenization is probably the most important component in the evolution of the world's financial plumbing. Chris from TradeWeb, who's just here, said very much the same thing. He imagines the world, everything's going tokenized. You guys saw this pretty early. And so what do you think it takes to get from being nascent and kind of small players to everyone not thinking about tokenization, just thinking this is the way finance is run?
So, I worked at Goldman before starting Ondo. I was on the digital assets team, so I have the perspective sort of from the inside of evaluating what these, end-to-end blockchain tokenization platforms look like. And candidly, the business case is often pretty challenged in the short to medium term. And, there's this vision that if everyone moved over, things would be a lot more efficient, and that's true. But there's a lot of competing interests and, a challenging pathway to get there. And so we've taken the approach of, let's expand the market. Let's create new markets to begin with. And so that's why we're focused on, this value proposition of enabling accessibility for the first time for so many market participants with global markets and with USDY, our sort of flagship tokenized treasuries product. And then as we prove out the utility, as we start to use these tokens in on-chain financial infrastructure, so as collateral for on-chain loans, for derivatives, as we start to show how the benefits of DeFi can be applied to traditional securities, then the value prop starts to become more clear, even for folks in the US, even for institutions who already have access. So we're not quite there yet at making tokenized stocks strictly better than traditional stocks. We just launched Global Markets 6 weeks ago. The big focus there was making sure that tokenized stockholders would have access to the same liquidity that you have access to if you hold the regular stock. we're really the first, of folks doing tokenized stocks to offer that. And, I think that's been a big reason for the early success. But, there's other things to do. We have to give them access to the same leverage capabilities. That's sort of what's next for us. And yeah, we're very excited to bring this to the US and to institutions, once that's proven out a little bit more.
I've asked a few people at the desk here this today, and we've had some interesting answers. So I'm curious to hear your perspective. We've heard about what's working and the opportunity, but what are some of the challenges still in the way to seeing this at a more large-scale level?
So with tokenized stocks, there's definitely a bit of like fitting a square peg into a round hole, and that like crypto infrastructure, I mean, at a very high level, and I think this is very obvious, but it was not built for securities. And as an example of that, like crypto infrastructure is built almost universally, with a few exceptions, on the idea that trading is always going to be done on a pre-funded basis. So there's going to be no clearing, no net settlement. Everything's like real-time gross settlement. If you want to sell, some cryptocurrency on a crypto exchange, you have to send the cryptocurrency to that exchange first, right, before you can like put it on offer on the order book. Same for most decentralized exchanges. You got to put it in the liquidity pool, if you want to make markets. The exceptions are intent-based decentralized exchanges, or like RFQ, request for quote protocols, which is where we focused early integration in. So, we made it possible so that a user could come to one of these RFQ platforms, request to buy a tokenized stock, and then only then would the seller be able to like fill and actually settle by, coming to us, minting the token, and then settling. So that's sort of like, in our case, it's sort of like a multi-second delayed settlement. But that is the type of infrastructure that, is used for good reason in TradFi that we need to like port a little bit more into crypto. There's a lot of other examples, but that one is obviously very top of mind.
Nathan, thank you so much for joining us at the desk. As always, it was a pleasure having you on.
Great. Thanks so much for having me.
Thanks, Nathan.
That was Ondo Finance CEO Nathan Allman. We are going to take a quick break. We'll be right back.
Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters.
Hey everyone, welcome back to CoinDesk Live from Chainlink SmartCon. Now we've learned throughout the broadcast that to go from pilot to production, there needs to be a robust regulatory foundation and compliance parameters. Our next two guests are on the front lines as general counsels at Chainlink and Say Labs. Ben Sherwin and Gerald Gallagher join us now. Hello to you both.
Hey guys, good to see you.
You as well.
Thanks for having us.
All right. Market structure has been a big theme of the day, a hot topic from your respective seats. Talk to us about what lawmakers really need to get right in market structure for your business to continue. Gerald, we'll start with you.
Yeah, for sure. So I think we're at that last mile stage. Obviously, we got Clarity passed out of the House. We have Genius has passed law. And it seems like at this point, there's really just a few kind of key issues that we're still debating. Obviously, DeFi is a big topic. But there's enough momentum, I think, on the Hill. You know, one of the themes, I think, of being here at SmartCon is like the suits are here, right? They're ready for regulation. They want to embrace it. And then what does that do for kind of the legacy folks in the industry who are like, you know, hands off my DeFi? So yeah, we'll see how it goes. But I think we're in that last mile territory.
Yeah, I agree with that. I think, you know, there are two aspects. One's the policy aspect, and we're inching closer there. And you also have the politics aspect. And so I think that gap is being bridged. I think you have the right people in the room talking, so it's hard not to be bullish. You know, it's a question of when, and I think that certainty will help the entire industry. I think that's where we really benefit, is where the industry grows, and Chainlink's at the center of that. So we're seeing that as being key. So it would be very helpful.
I think both of you, Say and Chainlink, are essential to this working, right? You both play a dramatic role. Do you think this gets passed full on, or do you think there's some areas that maybe we have to punt a little bit forward in order to make sure we get something on the books? Gerald?
Yeah, I think so. To start, obviously, like Say as a layer one, you know, we spent a lot of time explaining to people what we're not because of this regulatory environment, right? So we're not a custodian, we're not a wallet, we're not an exchange, we're not a money transmitter. I think having regulatory clarity for certain types of activities will allow us to jump into other spaces with a lot more predictability. And it's where we're in this mode where, again, there's probably a few key issues that if we can get across that, you know, we're ready to engage. And then also just from a partnerships perspective, obviously Say and Chainlink work together. I haven't met too many folks who don't work with Chainlink, but you know, being able to work with regulated partners who are also now comfortable saying, okay, we understand the technology, we understand what the assets are. And then to your point about what's going to be done sort of post legislation, I think we're also looking at the SEC. Hopefully we have a confirmed chair of the CFTC who can go in and implement all these new rules that we see Congress looking to pass.
I just want to ask a quick follow-up before we come over to you. What happens if DeFi is left out of market structure legislation? What does that mean for you?
I think DeFi could easily be left out of market structure legislation, but for the fact that you still have the ability to prosecute software developers, which I think the industry correctly has driven, put a red line under that. So I think that part of the legislation, the BRCA, has fans on both sides. And I think that is a sensible regulation to put in place. It's not that DeFi can't exist without it, but that kind of certainty will bring institutional money to it, and I think that will just grow the pie. And I think that our ability to operate under these new rails and really take advantage as a country is dependent upon that.
Yeah, I just, to elaborate on that, I think there's a significant portion of DeFi that wants to be left out of market structure. There's, you know, leave us alone, BSA, all these other sort of elements, you know, they would be comfortable, like the FIT21 carve-out, which was passed, obviously, in the previous Congress, I think, was okay for a lot of DeFi folks, and then what ended up in Clarity maybe wasn't quite as strong. So to Ben's point, like the notion that developers are operating under kind of a free speech doctrine and not some kind of criminal conduct is vitally important for DeFi in the United States.
I feel like, you know, it reminds me of some of the early conversations around the Web2 platforms and technology and who was responsible for what. You know, when Sergey was on before, we talked about the education that's needed for a lot of these lawmakers. Both of you guys talk to these folks all day long. Gerald, you have the show Crypto in America where you guys are constantly having that conversation. How much education do we have to do, or do you think they're finally starting to get it?
I think they're starting to get it. I think there's a certain group of people that absolutely get it. I think there's still some concerns that you have on the Democratic side, which are being addressed. Those conversations are ongoing now. I'm hopeful for a resolution on that, where you can have a balance between a robust protections for consumers, as well as protections for the software developers who are revolutionizing this world.
Yeah, I think crypto is inherently like a non-partisan issue, and that's very important to emphasize when you're talking to folks on the Hill. This is not a left versus right issue. This is the future of innovation technology in the United States. I do think one thing that we saw sort of through this last cycle, and we'll see if that plays into 2026, is it doesn't really make any sense to be, there is no anti-crypto voter Like, that's not a base that you can play to. And so I think a lot of congressional members are seeing, okay, well, if I can't rally against this, there's no audience for this, how do I go educate myself so that I can talk intelligently about it, to constituents and regulators?
I want to follow up, though, because there was an anti-crypto army.
There was.
and really, and again, we talked about this earlier, as the byproduct of what SBF and FTX had done, it really turned a lot of people off on the Democratic side, because they just thought, oh, wait, we can't touch this, which was very short-sighted at the time. So I love that phrase, that there really isn't that anti-crypto voter that you have to try to now play to. I mean, Ben, are you seeing that as well playing out?
Yeah, I think that's true. I agree with Gerald on that. And I think that the education is really around, okay, what could you do? What could you do to advance consumer protection without damaging this great new technology? And I'm from the early days of the internet, and where government took hands-off approach, let it develop, let it grow, and we became a leader. The United States became a leader. And my great fear is that we pull back from that and we let others take the reins, and I don't think that's a good future for us.
Yeah, I think just combining that with the educational piece, you don't want to throw the baby out with the bathwater here. Like, there's a way that, the early internet was supported that probably did result in some negative consequences around social media, things like that. But it also created some of the greatest innovation in GDP, for the American economy, with the good and the bad, right? So I think making sure that we don't allow this technology to go elsewhere, to flourish, to be regulated by others is pretty important.
And I would point out that it took until 2005 for the SEC to come up with new rules that took the internet into account. We have to be patient. We have to keep the path, keep going, and there's a lot to be done, but I'm bullish about the future.
Can I just follow up on that, Ben? You guys are both lawyers. Like, is this how long it just takes?
Yeah. I mean, these are complicated questions. They're trying to bite off a lot, and so we believe that comprehensive legislation is important, and that just takes time and for people to understand and get on board. These are very long bills. We've had to read them multiple times, which is a lot of fun. I'm sure Gerald saw it.
Yeah, multiple drafts, multiple bills, multiple comment letters. I think it's important to make sure that we get it right. The closest comparison I've heard is Dodd-Frank. That took a decade of really implementing afterwards. And so viewing this as that type of gravitational shift is the right way to approach it.
As GCs, how are you preparing for the chance that it doesn't pass and gets deprioritized as we head towards midterm elections? What risk does that introduce to your everyday operations?
I think we would be very disappointed if we had to protect founders and developers by sort of asking them to leave the United States, right? You don't want to be in that kind of a position. You don't want to be asking them to move somewhere in the Caribbean just so they can, go with spotty Wi-Fi and try to write code. I think it would be a huge letdown to not have some progress made here while we have the opportunity.
Yeah, I think that progress is hampered by the shutdown, but you still are seeing the Senate staffers meeting. They're still driving forward, so I think that's a good sign. I think that they're trying to find common ground. I think that's a good sign. Even if it doesn't happen this year, which I think everyone's driving towards, there's still time, and early in next year, which that's where I think the rubber will hit the road.
I think everyone's fingers are crossed. Ben, Gerald, thanks so much for joining us at the desk. It was a pleasure.
Thanks for having us.
Take care.
That was Ben Sherwin and Gerald Gallagher. We're going to take a quick break. We'll be right back.
Want market-moving insights at your fingertips? Download the CoinDesk app for news, prices, videos, and events on the go. Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters.
Welcome back to CoinDesk Live from Chainlink's SmartCon. We've got a little bit of an audience, Sam. I love
A lot of
this.
folks here, yeah.
We have IRL people watching us, people online watching us. All right, we're going to welcome in our next guest now. Our next guest enables institutions to earn yield on their tokenized assets through staking. Laszlo Csabo, co-founder and CEO of Kiln, joins us now. Hello.
Hi, thanks for having me.
Thanks for being here. This is day 2 of Chainlink's SmartCon. You are going to be on a panel right after this called How Chainlink Runtime Environment Connects TradFi, DeFi, and Tokenized Assets. Sam and I got a crash course in Chainlink's runtime environment yesterday, but give us a little bit of a preview of what you're going to be talking about.
Yep. So we are one of the leading on-chain platform for institutions and wealth when it comes to yields. Staking was the first product that we offered to customers 4 or 5 years ago to like exchanges, custodians, wallets. And we're very, very happy this week to announce a partnership with Chainlink as we go and move forward to the next phase of yields on-chain. So that's what I'm going to talk about, essentially.
I mean, you guys have, what, $16 billion under management being staked. How are you going to utilize the CRE in order to sort of create opportunities for your customers?
Yep. So staking was the first product we offered. It's essentially how you secure blockchain and get like rewards from the network fees on Ethereum, Solana, other networks. What we are launching now essentially is offers and yields around DeFi, right? Stablecoin is a big topic this year and will be a major part of the crypto growth moving forward. So we start to offer lending and borrowing yields into DeFi for wallet customers. And now we're using the CRE and ACE products so that we move into more of a on-chain asset management type of yields, right? So we're going to work with large on-chain asset managers so that they run on-chain funds, strategies on DeFi, vaults, as some DeFi folks will call them, and offer that to all of our customer base, the exchanges, the wallets, the custodians, and the fintechs.
What are institutions interested in? We think about staking, we think about Ethereum, but there are also a plethora of other DeFi assets you can stake now and earn yield from. How degen are the institutions getting?
Right. Yeah, I think 4 or 5 years ago when we started, it was first the exchange, then you had the wallets, the custodians that would offer staking to their customers, right? That was the most evident of crypto-native actors. The first institutions, proper traditional financial institutions you've seen staking were DTPs providers, right? For example, we work with CoinShares or VanEck in Europe. And then you have now in the US these ETF that will be able to offer staking to their customers. And I think now there's a lot of excitement around on-chain asset management. First of all, lending was a concept that an institution can grasp, can understand. Oh, I have USDC, I have USDT, I have stablecoin on my balance sheet, and I can, lend it on-chain and get a reward, a yield against it. And now they will be looking at more sophisticated strategies. So on the asset management side, you have more traditional asset managers that are thinking, well, what I've been doing off-chain for years, potentially I have this new set of customers that are already on blockchain and I can offer yields to.
I mean, I feel like, Kiln was one of the early companies doing this and really offering this as an opportunity. How did you build trust among these institutions and these clients of yours to say, let us help you figure out this puzzle?
Right. Trust is all about communication with customers. It's all about security, right? That's definitely a very, very big topic in crypto. How do you build an internal security team? How do you build a track record? How do you make sure your validation key when it comes to staking are secured? How do you make sure your smart contract are audited and secured? And then I guess it's just years of operating and announcing great partnership with traditional financial players that have great and long due diligence when it comes to like using providers like us. So yeah, I think this is how you build trust.
Tell us a little bit more about the security element. How are you thinking about security? How do folks know who have their assets on Kiln that their assets are safe?
Right. Yeah, so we had an incident a couple of weeks ago, which was, kind of a big event in the staking space. And what we did is essentially rebuilt the whole infrastructure from the ground up. We had a team of 4 people in security. We'll double that team. We essentially made sure an extreme large of our customer would stay on the platform and just communicate. And now we essentially even talking to all of our peers, sometimes our competitors, to explain what happened, how they can secure the platform better. And yeah, we kind of confident after a couple of weeks of the incident, even building security for years, we now rebuild a platform that is the most secure in the market.
A theme that's come out of the conversations we've had here at the desk is not just what TradFi can learn from the digital asset space, but what the digital asset space can learn from TradFi.
That's right.
And I think dealing with a crisis is something that we can learn from more established firms. I think the incident you're referring to was an API endpoint being compromised.
That's right.
Right? Talk to us about what you learned from dealing with that incident. You said communication, that other digital asset firms can take forward should they experience an incident.
Right. Yeah, first of all, you need to talk to your largest customers, right? Really explain what happened, really explain the mitigations, really explain, how you put customer funds in priority. Second, you need to make sure you rebuild the platform very quickly in a very secure way. So that it doesn't happen again. That, like in that case, blind signing is not a great flow, and that all of our customers, all of the customers in crypto should always clear sign, right? See what they sign. And lastly, I think you need to then invest 2 to 3 times the amount you were investing, right? Because you are always under attack. And though you can always learn from traditional finance about great practices, but a lot of these attacks are quite new, right? I was talking to some of the largest asset manager earlier today, and we all recognize that these are new practices, new type of attackers, and we need together to build a secure, more secure space. Yeah.
And you guys were very transparent about how you approached it. With I think we need in this industry the ability to say, we are learning. I love what you said about the idea that we could also inform our competitors and others in the industry because we can grow better together. You can't be on the internet and not expect that someone isn't trying to attack you in some way, right? So the attack vectors have only grown exponentially. But I just want to, say I think that the way you're handling it is the way we need others to handle it when it happens to them as well.
Thank you,
Laszlo. Thank you so much for joining us. It was a pleasure.
Thank you, Laszlo.
Thanks.
That was Kiln CEO Laszlo Csaba. All right, we are gearing up for our last interview of the day. But before we get there, Sam, I say this at every event.
What do you say?
But the maturity of the conversations we're having, and the quality of the conversations we're having, the quality of the conversations that are being had on stage just get better and better and better. And it makes me happy to be reporting on the industry and to be a part of it.
Do you think that there is, any chance that we get too boring? That we become
totally
too quiet? That we aren't being, breaking enough stuff along the way?
There used to be a show on CoinDesk called The Hash, and we used to say, when we would get these institutional stories, a lot of the stories that kind of encapsulated a lot of things we've been talking about today, this was years ago now, we'd say, the road to boring, but it means that we're doing something right. And I think eventually, it just becomes the next version of the financial system. But there will always be, I think, that alternative system that people can opt in and out. And I keep saying that because I don't want folks watching to think I just think this is the next version of the financial system and everything that this was built on is gone. I don't think that's it, but I think there will be choice. And I think boring is good sometimes.
I mean, you can keep that one to yourself. But I am going to say that I think that we've heard a lot about plumbing, right?
We have.
We've heard a lot about the rails. We've heard a lot about cross-border settlements, things that many people would would deem to be not the most interesting side of crypto, and yet I actually look at all of this stuff and I say I'm fascinated every day that we get to have these conversations, because we are witnessing in real time what is being built. Our next guest knows this better than almost anybody.
He really does.
So closing out the show, I think we should get to it.
Founder of Aave Labs, Stani Kulachov, joins us now. Hello.
Hey, thank you for having me here.
Do you feel like we're getting a little more mature? Are you feeling a little bored as you build?
Yeah, I'm probably the most boring person now in DeFi. Low risk, boring DeFi.
DeFi is always an exciting spot. I think we can find a lot of excitement in DeFi. Talk to us about Aave V4 is here. We are in Q4. What can the Aave community expect, and what is the goal of this V4 upgrade?
Yeah, I mean, the context of V4 is obviously a lot of the success that we had with Aave so far, peaked at 75, 76 billion worth of net deposits. And out of that, 16, 17 billion in stable coins. Aave is a very stablecoin centric business, and more recently we've been introducing also tokenized assets to be used as a collateral with Aave Horizon. So Aave V4 is catered to the future, and the future is that we are still going to have crypto asset-based lending, so crypto-backed loans against Ethereum and Bitcoin, but we're going to have a wide range of traditional assets coming on chain and being used as a collateral and being used in DeFi. So Aave V4 is enabling this kind of like a segregation of risk without segregating the liquidity provisioning and creating a capital efficient system that then scales all the way to Wall Street. So that's the idea of Aave V4.
You know, Stani, I think about, you guys have been around for a while. You've really been through kind of the evolution of this industry.
I feel old now.
You feel old. You know, you just tweeted yesterday or last night, just use Aave. But
just use Aave, yeah.
But really, I mean, to me, when you say just use Aave, it's because we understand this industry better than most compared to our competitors. We're not, you know, we may not be the newest, but we actually really are reliable in what we're doing. Yeah. What's your talking point to why people should use Aave?
Yeah, I think DeFi is essentially based on trust, and trust is earned, and it's earned by building a really good software, really great protocols that are resilient, battle-tested, and have very little single point of failure. So if you enable us to create resilient software, then we have a chance to actually replace the existing financial rails that the traditional financial system uses. And Aave has been able to do that over the past years and proven that you can have resiliency. And we saw that Aave has seen the Black Friday, the Black Thursday, the Black Monday, and all the different scenarios, ups and downs, and multiple cycles. And as we establish this trust, it's important that we're able to retain the trust within the DeFi community, because any kind of a setback will push the adoption backwards. So our goal is to build safe infrastructure, and that is scalable also to these new assets that are coming onto the DeFi as well.
I want to take a step back and just draw on your experience building in DeFi. You know, our conversation has been really focused on institutional adoption, institutional products, and the liquidity being pumped into the system by institutions, and not so much on retail anymore. It feels like retail has taken a little bit of a step back. They've been on the sidelines this last bull cycle. Do you see retail coming back in? What's it going to take? And is the whole system just kind of shifting more towards the institutions, and once that trust is built, they'll be back?
I think a lot of the retail will come along with embedded DeFi. And embedded DeFi, what I mean is that's using DeFi in the existing traditional financial or fintech infrastructure. So replacing the backends or the traditional business models with blockchain and DeFi-based models. And that's where a lot of the retail will come indirectly to abstraction, through basically trusted partners. And I think that's one way to think about. So yes, we're seeing a lot of institutions at the moment, because there's also a lot of regulatory clarity at the moment. We had the Genius Act. We have market structure bill going on at the moment. So I think institutions are actually starting to double down on digital assets. And that's why there's a lot of presence. But at the end of the day, the people who will benefit from the technology the most is going to be the retail.
Stanley, I think you guys have done what, $1 trillion in all-time loans, just about. The new sort of Horizon RWA market is what, 520 million in deposits already. What are the things that really are exciting you about the future, where this sort of the ecosystem is going?
Yeah, I think being able to provide access is really, really fascinating. Being able to tokenize assets that maybe didn't have liquidity before, being able to create financial opportunities that basically existing among few, being able to globalize these opportunities. I think access to dollar, access to yield is a big thing. So I'm really excited about the idea of taking what works in DeFi and being able to distribute globally to millions, maybe hundreds of millions and billions of users down the line, the same way as we use the internet and all the internet protocols as of today. So DeFi could become this resilient backbone to connect all finance together and ensure everyone has a level playing field and opportunity as well.
I just want to follow up with, I was talking to someone in TradFi a couple of days ago, and we were talking about RWAs. And he said, yeah, they're great, but we need these things to be securities that can be regulated the way that we are normally thinking about traditional assets being regulated. And he said, we're not close to that. And and I don't know if that's true. I mean, what's your point of view on where the RWA conversation is, and how close we are to this being really where tokenization goes to where we want it to go?
Yeah, I mean, the RWA discussion is a little bit easier because we're dealing with securities. So securities that already are regulated, issued in paper, digitally, and now on chain. So it's a little bit easier concept. And I think down the line, what's interesting is how do we move out of a world where every kind of tokenization implementation has a digital twin to actually directly issuing on-chain and making these products available, not just the institutional investors, but also to the retail. And I think that's going to be really fascinating. And that's the kind of like a bottleneck that we have to cross.
We had Chainlink co-founder Sergey Nazarov at the desk earlier this morning. I know the two of you will be in conversation on stage at the conference. When you get into a room with other founders in the space, what are the challenges you're talking about? As a collective, what's the next hurdle that you are moving towards?
It's quite interesting. We typically actually talk about opportunities. So we are very like we see a lot of opportunities in the space. But there's challenges as well. So I think education is one of them. So how do we educate institutions about how the technology works, how the DeFi works, how do you, how Aave differentiates from the rest of the ecosystem, and what are the rails, what kind of oracles you are using, and that's where basically Chainlink and Aave has established a really good partnership of actually develop some of this technology that didn't exist in the RWA space, for example. So RWAs are really interesting assets because you have to follow a lot of the data in the off-chain world and bring that data in and have a right pricing strategy so you can use these assets as a collateral. So that is not an easy job to do, but it's something where we're continuously developing as well.
Are you seeing the regulatory framework being loosened in the US or allowing for innovation to really thrive? Really, is that really what needs to supercharge the global sort of world that you envision, that as goes the US will go the world? Is that sort of the way you're thinking about it?
Yeah, I do think US is the leader, and US sets the kind of stage for globally. Europe had a MiCA regulation already, but the world follows what's happening in US and takes that example. And I think now the regulatory environment is a bit more clear. And there's actually a really optimistic future for digital assets, DeFi, tokenization, and in the whole our industry. So I'm very optimistic, and I definitely think there's going to be a lot of opportunities and good companies being built here in the United States.
I heard you say that DeFi summer might be around the corner. Is that still your take? Could we have a DeFi summer?
I mean, every summer is a DeFi summer, right? At least for me.
Or maybe a DeFi winter. Okay, that's a good answer. Stani, thank you so much for joining us at the desk.
So much.
It was a pleasure.
Thank you so much.
Thank you, Stani.
Thank you.
That was Aave Labs founder Stani Kulichov. All right, Sam, that's it for you and I and our audience. We are at the end of day 2 for CoinDesk Live from Chainlink's SmartCon. What are you taking away? I've been asking all of our guests that, but what are you going home with?
What am I going home with? Well,
some cool swag.
Got some great swag here. Something Stanley said I think was really interesting, right? He talked about the idea of digital twin when it comes to real-world assets.
Mm-hmm.
And I think about also the digital twin of kind of what 100 years ago would have been stock certificates, and now it can be a token that you can trade 24/7. And it started to hit me whether or not this is actually the metaverse we were promised.
I love this take, Sam. Anything that brings us back to the metaverse,
we got to talk about the metaverse.
In.
Because the metaverse may not have been this sort of virtual world that we can traverse in our digital selves. It may have been the fact that, whether it's real estate, whether it's our lease on our car, whether it's the stocks that we hold in our portfolio, that really maybe that's where the digital twin was, and the friends we met along the way.
I really love that take. I'm probably going to steal it from you.
Please do.
And say it at some time as my own thought.
Right,
Please
as long as you don't bet at me, that's fine.
For copyright. I obviously, I talked about it so much on all of our chats in between interviews. Regulation is so important. It's something that we cover on the show that Renato and I host to really follow what's going on in DC. It's so important if you're building in this space to be thinking about the different outcomes. We heard how our guests are thinking about their businesses. Should market structure pass or should it not pass?
Let me interrupt you. Yes. You have a show. You talk about this consistently with Renato. We asked a lot of people. So what odds are you giving today on whether this year we get market structure?
I don't think it passes this year. That's my bet. I'll get on Polymarket later.
Is it not passing 40%? Is it not passing 10%?
100% not passing this year.
So if you were placing your Kalshi bet today,
yes,
you would say there is no possibility. I'm betting the farm.
I think it's impossible. It's November 5th today. I'm not sure if the government reopened while we were broadcasting, but I see some heads shaking.
Yeah.
So the government hasn't reopened. It's November 5th. I don't think it happens before Thanksgiving. I think after Thanksgiving, we head into the holiday period. I don't think legislation gets passed. I hope it comes early next year. If it doesn't, we will revisit this conversation.
All right. Well, I'm going to say you and I, in a few weeks, are going to be in London.
Yes.
I'm going to bet you an afternoon tea.
Okay.
No, it won't be passed by then. So you're going to win that afternoon tea.
I have already won afternoon tea. I love this.
Yeah,
Sam, tell me your next
bet.
bet.
But Hong Kong,
okay.
You and I are going to be together in February. So we're going to do some meal at a place that is moderately priced.
I want dumplings.
Dumplings on one of us, depending on whether it gets passed.
All right, so there's a reason to tune in to Consensus Hong Kong, which we will also be streaming live from. Thank you so much to our audience who followed us at home.
13,000 of you.
13,000 of you.
Thank you so much for doing that.
Thank you to the Chainlink community at home and everyone else who followed along our conversations. For Sam Yuen, I'm Jen Sanasi. We'll see you next time.